Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at Bitcoin's daily, weekly, macro, and short-term price action, as well as going over the total market cap and altcoin market. Are we going to see an altcoin season? Will Bitcoin continue upwards, or are we going to see another short-term correction? Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you were interested in, you can join us on Telegram with the first link in the description. Go ahead and sign up to our Telegram channel, of course. You'll get access to a whole bunch of stuff, including charts, analysis, updates, videos, educational posts, and really everything you need to stay in the loop with cryptocurrency, Bitcoin, and the relevant economic news. And if you were interested in taking your trading to the next level, join us in VIP. You'll get access to trading setups with exact entries, targets, stop losses, and so much more. You'll also get access to our group chats, our general chat, trading chart and education chat, help, news, daily video, and trade setup chat. More information about all of that can be found in the pinned comment of the free channel. By clicking my name, you can find our entire trading track record of over 40 months of trading data with an 80.85% win rate, and of course a link to a video showing you inside the channel. Go ahead and check it out, and let's dive on in. So taking a look, guys, like we said in today's video, we're discussing Bitcoin from a full round perspective, the macro, the short term, everything you really need to know, as well as jumping into the total market caps and the altcoin market cap. So as we can see over the past 24 hours, Bitcoin is still more or less pushing sideways. We are still in this gradual uptrend, which we did develop all the way back from that low point at 52,000 at the start of September. We can see that uptrend represented by this diagonal trend line. But over the past 24 to 48 hours, we have seen a degree of volatility and chop build up, particularly surrounding the CPI data release, which was over here, as well as that was PPI, sorry, and the CPI data release, which was over here. So we've seen a fair bit of chop, and we do have a fair few more news events actually pending over the next coming days, particularly with the 19th of September being the interest rate decision, which is that major interest rate decision, which we know to be more likely to be a pivot. So taking a look, guys, on the market data, 24-hour volume has dropped 20% at 108 billion, 24-hour liquidations at 72 million, down 50%, 32 million liquidations for longs, 40 million liquidations for shorts. We'll come back to the short-term price action in just a moment, discussing exactly what is happening and what is likely. Moving over to the broader markets and the DXY. The DXY has seen a little bit of a tick toward the downside. Again, not expecting that much strength to occur on the DXY while we are sustaining underneath this yearly uptrend. Once more, provided we are underneath this yearly uptrend, it is a matter of when, not if, that we are going to break below this 1.5 year long horizontal support level. This 1.5 year long horizontal support level, if broken down, will facilitate a strong move up for risk assets. We are looking for a bullish season for our risk assets for Bitcoin, for the S&P 500, bullish continuations on the macro, of course. We do have our symmetrical triangle pattern, which again was our 1 year long consolidation pattern, which did break downwards. If we take a measured move for the width and apply that to the breakdown point, we can see the measured move is well and truly below 95 on the DXY. So we do know that we are expecting a macro continuation downward here for the DXY, provided this horizontal level of support does not sustain. So when that level breaks down, we then expect this downward trajectory to continue, and we expect the price to drop. The only thing that can save the DXY here is if the Federal Reserve say we are not going to drop interest rates, and they actually turn around and say we're going to pause them again, or we're going to pump interest rates. I don't see it happening. It's a very low chance, but hypothetically, if that happened, we would likely see the DXY pump. And if the DXY is able to reclaim this diagonal uptrend, it will be back within the confines of this structure, and therefore swings to the range high are possible. But this scenario is very unlikely. We are looking for this downward move for now. The S&P 500, a fantastic weekly candle over here, 5,600, nearly pushing all the way up to the prior week opening price. We are still looking very strong. Again, provided we hold this weekly low point, we are going to be expecting macro continuations into that 6,000 region. We would only expect this move to trigger once our prior high is able to break, but until then, we are very, very bullish. Provided we sustain above that green box, which is our horizontal support level, we are expecting continuations. Once more, we can take a look. Our low points over here has been developing, and none of these lows have been taken out. So we are in a strong and aggressive uptrend, in a period of horizontal consolidation, but this uptrend we have been in for now a year and a half is still very much intact. None of these lows have yet been taken out. The trend is still very strong. So the S&P 500 is very much bullish. So in today's video, we're taking a look, like we said, at the daily charts. We're going over the short-term price action. We're going over Bitcoin dominance and the total market cap, specifically the altcoin market cap as well. Before we do get into it, if you do want to support the channel even more and get 15% discounts on your trading fees for life, sign up to my links down below to BitGet, BitUnix, or BingX. We'll play a quick ad and we'll jump back into the video. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back into it. So as we said, we're going to be taking a look at the daily chart, but also the macro uptrend. So let's first and foremost start on that macro uptrend and jump over to the weekly and 2-week chart to discuss some indicators. We're going to be taking a look at the Ichimoku Cloud indicator, but we're going to be doing it with context to prior yearly bear market resistances in the prior cycles. If we take a look at our prior cycles, we had some critical bear market resistance levels, which were marked out as per these horizontal resistances, meaning once these horizontal levels broke, we entered these macro bull market, these parabolic cycle phases, the moves which eventually took us to reach our all-time highs. We can see that happen in our first cycle over here. If we look at our second cycle, we have seen a very similar pattern. Our horizontal neckline of resistance, we broke out and saw macro continuations into these all-time highs. And again, in the present cycle, we have seen a very similar thing with that bear market resistance breaking out and seeing that macro continuation upwards. If we now apply the Ichimoku Cloud indicator to this, we can see at the point of which the price action has broken out from that horizontal region and onward, we remain above the upper band of the Ichimoku Cloud. We are remaining above the clouds until we eventually break back into it, entering a macro downtrend. If we take a look at the prior cycle, we can see a very similar scenario where we break through that horizontal resistance, we remain above the clouds the entire time. We even come down to retest them until we create that high, eventually breaking into the clouds, creating that macro downtrend. And the current cycle, we can see Bitcoin is doing exactly the same thing. We break through the horizontal resistance, we remain above the clouds of the Ichimoku Cloud, and of course, we do that until we eventually create an all-time high. What we can see now is we are currently retesting the upper band of our Ichimoku Cloud, once more contributing or confirming the fact, as per prior cycles, we are seeing that Bitcoin, from a technical perspective, is still in a macro uptrend. This is a very important pattern we have noticed, and if we do see a break into that weekly cloud, that could indicate the start of a macro downtrend. Now, with that, if we take confluence from our structural levels, which is going to be that descending channel formation, and we look at where that breakdown would occur, if we can look at that for a second, we can see that the descending channel support level crosses into the clouds, and therefore for us to break below that cloud, we would need to break underneath the descending channel low, invalidating this bullish structure. So for us to enter this high time frame downtrend, the descending channel structure that we have been developing over 5.5 months needs to invalidate and needs to break down. That holds consistent with what we have been saying over the past couple months, which is while we remain within this structure, no matter how long it goes for, it is a bullish consolidation pattern, and we do eventually expect the price action to push toward the upside, provided the low range of this structure is able to sustain. So moving to the daily chart now, that's a very interesting thing, guys. I want you to pay attention to that chart, and particularly the break into the Ichimoku cloud on the weekly, a very important thing to watch out for. Let's move over to the daily. What we can see here is we are very much still in our descending channel formation. The level we are watching very closely here is going to be that weekly downtrend on the RSI. This weekly downtrend on RSI is a level of utmost significance. It is a representation of the momentum over the last 5.5 months. This is 5.5 months, if not a little bit longer now. What we can see is that as the price action has been decreasing, our momentum has been falling. We are having decreasing momentum over the period of which the price has been in this structure. However, what we can also see is that the momentum is starting to flatten out. The volatility between the lows and the highs is starting to reduce. This is an indication of bearish exhaustion, and this is happening as Bitcoin is starting to reach the lower side of this channel, as well as our prior area of structural support at around 52,000 as per our VRPV. So what we can see here is if the RSI is able to break upwards here, we would see a positive momentum shift, indicating momentum has flipped positive for the first time in the last 5 months. But more importantly, that would represent that the selling pressure that has been developing, or that has developed throughout the last 5.5 months, has been inefficient or ineffective at breaking the price lower. That would represent that the bears have been exhausted and the selling pressure has been lost. Buying pressure will be taking over and the price action will continue upwards. So a very, very bullish sign here. If the RSI is to break upwards, I would be very shocked to see this RSI break up and not see that price action follow suit. It is very likely if we see the momentum flip positive, we will see the price action rally to at least retest the range high of this channel formation. Very good stuff, guys. Let's move over to the daily chart. The daily chart, as we can see, is looking a little bit more choppy. Of course, there's a lot going on. The key thing we are looking on the daily chart is going to be our daily candle closes, which occur at the range low and the range high. If we take a look, since we entered this channel, we have seen numerous retests on the daily, even breakouts on the daily as per here, and there's a few more on the chart that we have seen breakdowns. Now, the most important thing is that we do not close a daily candle underneath the range low. If we are able to close a daily candle above the range high, however, that would validate a break upwards and we will see a continuation. The reason we are looking for a daily candle is because during the course of the last 5 to 6 months, we have yet to see a single daily candle close above or below these trend lines, and therefore a daily candle close would act as a point of difference in comparison to the data we have had available, which could potentially suggest a shift in strength and thus an increased likelihood for a price to sustain in the direction of which it breaks. So watch out for that one. Let's move over to the short-term price action. Here is the short-term price action for Bitcoin. We have seen a fantastic bounce for Bitcoin over the last couple of days. Let's zoom out over here. We have seen a great bounce from that range low. We have seen a perfect support resistance flip of 55 to 56. However, we are starting to see some resistance, and this is going to be a bearish divergence printing right over here on the 4-hour at our prior area of resistance, or should I say support. If we take a look at the price action, we had a horizontal range develop over here. We saw a breakup, We saw failure, we broke back into the range continued along that support, we eventually died off and continued. This prior area of support now becomes a current area of resistance. This is where Bitcoin is currently challenging, and it does appear like it is struggling a little bit. And again, it could be struggling as a consequence of the recent news events spurring some volatility, or it could be struggling as a consequence of the price simply just losing momentum and buyers running out of steam. If we do take a look at the hourly, we can see over here on the hourly that not only do we have a bearish divergence as represented by our RSI, we take our peaks on our RSI as represented by over here, and the price action as represented by over here, we can see momentum has been dropping while the price action has been climbing. But we can also see on the CVD that the CVD has actually printed a lower high at the same point of which that lower high has been printed on the RSI. This is a sign that buyers are generally weakening during this uptrend and we are losing strength. So the probability we do see a little bit of a correction over here, potentially to the POC level, potentially to this prior low, is greater than the fact that we will see a continuation on the short term. We could still see a continuation, of course, if some large buyers come in and step in. We can't see that in the charts. If someone just buys $1 billion worth of Bitcoin, we can't see that in the charts. That happens as the time develops. If we see some news event, yes, we could see the price action rise, but according to the data we have available right here, the technical data, we are seeing some exhaustion. We are seeing some momentum decrease. We are seeing some bearish divergences. We are seeing an inability to push higher, and we are seeing some resistance. So right now, I would be cautious in taking long positions. I would wait to see how this develops, or I'd be looking for entries, pending orders at these lower points of interest. If we are able to break upwards, the level of which I would really like to see Bitcoin clear to be more confident is going to be that prior high on that last bounce. So now we are looking at that $59,000 region, around about this region on the POC, on the VRPV, before we can be confident that we're going to see continuations higher. Until then, we are now in an area of resistance, which we are seeing again the weakness develop from. Now, zooming out, the expectations of Bitcoin is a little uncertain during this range. This range is the range of uncertainty. Above this resistance, we enter a range of clarity, and the clarity range is going to be 64,000 up to 70,000, a very clear range. The VRPV is dropping significantly in that range. We will very likely see continuations higher if we are able to breach 64,000. The question is, how the hell do we get up there before seeing more chop to the downside? And the main thing we are watching is going to be trigger events, such as that interest rate release, such as breakouts and sustaining above that POC level. So for now, we are at resistance. Be cautious on longs. If we do see short-term corrections, I'd be watching for bounces at 56, 55.5. But we are now moving into the weekend, and next week is a massive week with interest rate releases. It is normal for the market to become a little bit more uncertain, for the price action to get a little bit more choppy, and for the conditions to get a little bit more treacherous. So moving over, guys, to the total, we can see the total market cap first and foremost is mimicking Bitcoin. It is literally mimicking Bitcoin. We are expecting the same things we discussed on Bitcoin's chart, we expect on the total. So we're not going to get into that too much. But here is the big chart, the total market for altcoins, the total 3. What we can see here is there is one level we are paying attention to. Keeping it really simple. Actually, scrap that. There are 2 levels we are paying attention to, keeping it even more simple. The 2 levels we are paying attention to is going to be our horizontal support, represented by our green box, and our horizontal resistance, which is our yearly resistance, represented by the gray box. Above this point here, we enter the parabolic season for altcoins. This is when the parabolic season starts. Below this point here, we enter death. Okay, literally death. This is when altcoins die. Below here, it is over for altcoins. This is our bear market resistance, okay? What we can see is that the altcoin market massively flew up and then saw a massive correction to retest the bear market resistance. This is a classic support resistance flip. This is actually quite bullish. We would like to see a continuation onward and upward from here prior to breaking below this low. I would not be confident jumping quickly into altcoins yet. until we break out of this descending trend line of the descending channel formation we have on the altcoin market, which is also present on Bitcoin and the total. If that breaks upwards, we are very likely to see altcoins rally up to the parabolic resistance, where we could see another rejection before an eventual continuation higher. If at any point we drop below this horizontal support level, it is over for altcoins for a very long time, and I wouldn't expect altcoins to do very, very well. So the future is optimistic. It is not bright, it is optimistic. The macro charts are developing in a way of which could facilitate continuations, and the parabolic season, although has not started, is still on the table to start for altcoins. So it is a game of patience. It is a game of entering at the right time and not getting too trigger happy and buying every time it goes up 5%. So pay attention, stick to the charts, keep your emotions out of it. I'll catch you guys in the next video on Sunday. See you then.